Casey's General Stores Inc., Nasdaq, Casey, stock fell 1.34%, as on September 8, 12 a.m. Coordinated Universal Time -4, source, Google Finance, after the company missed the top-line and bottom-line estimates for the first quarter of FY23. Inside same-store sales increased 6.3% compared to prior year with a margin of 39.8%. Inside same-store sales were driven by prepared food and dispensed beverages, most notably Pizza SL. Ices, our refreshed breakfast menu, as well as cold dispensed beverages. Total inside gross profit increased 8.8% to $504.3 million compared to the prior year. Fuel gallons decreased 2.3% on a same-street or basis compared to prior year with a fuel margin of 44.7 cents per gallon. Total fuel gross profit increased 31.4% to $308.2 million compared to the prior year. Same-store operating expense excluding credit card fees were up 2.6%, favorably impacted by a 2% reduction in same-store labor hours. Alcoholic beverage sales remain strong as our team continues to leverage our approximately 1,500 UOR licenses throughout our store base. The fuel margin environment was especially favorable in the second half of the quarter as wholesale costs declined from record highs. At July 31, 2022, the Comp. Eni had approximately $781 million in available liquidity, consisting of approximately $312 million in cash and cash equivalents on hand and $469 million in undrawn borrowing capacity on existing lines of credit. Casey in the first quarter of FY23 has reported the adjusted earnings per share of $4.09, missing the analysts' estimates for the adjusted earnings per share of $4.32, according to the Zacks consensus estimate. The company had reported the adjusted revenue of $4.45 billion in the first quarter of FY23, missing the analysts' estimates for revenue by 0.57%. Additionally, The company has $400 million remaining under its existing share repurchase authorization. There were no repurchases made against that authorization in the first quarter. At its August meeting, the board of directors voted to pay a quarterly dividend of 38 cents per share. The dividend is payable November 15, 2022 to shareholders of record on November 1, 2022. The company expects same-store inside sales to increase 4% to 6% and maintain an inside margin of approximately 40%. The company expects same-store fuel gallons to be flat to 2% higher. Total operating expenses are expected to increase approximately 9% to 10%. The company expects to add approximately 80 stores in fiscal 2023, and expects to exceed our stated 3-year commitment of 345 units.